Well, thank you very much, Mr. Chairman. Let me thank you, Chairman Powell, for your leadership. Thank you for joining us in Providence. It was a wonderful evening. And I think it's important, too, that your efforts to ensure the independence of the Federal Reserve. Without an independent Federal Reserve, our national policy making is, in my view, severely flawed. So keep up your efforts, please. You mentioned that we've had an expanding economy for 11 years. By my count, that would be 8 years under President Obama and 3 years under President Trump, but the expansion is good. But there's still some issues I think we should address. The Pew Center put out a report in January, and they indicated that the share of wealth held by middle-income families has been falling for roughly 20 years. And I presume, I'd like you to comment whether it continues to fall despite this expanding economy. And in addition to that, they point out that income inequality in the U.S. has increased since 1980. If it's still increasing, please comment on that. And it's greater than in peer countries, other countries that are similar to us in many other aspects. So despite this expanding economy, if we're seeing a shrinkage of wealth in the middle class and income inequality, those are social and political and economic trends that I don't think are sustainable over time. They go to the fabric of the country. So are those trends continuing, and what policy can we adopt, both fiscal and monetary policy, to change them?
Those are longer-term trends that I think are driven by important underlying factors, many of them global. And so I think that I would assume that the data will continue to move in that direction. I think what they show is that incomes have been moving up across the income spectrum, particularly if you look at benefits, and if you look at after-tax effect, it gets more even that way. But it's been a particularly good time to be at the top end of the income spectrum. And I would point to two key problems I think we ought to address. One is low mobility. We actually have lower mobility from, say, the bottom quintile to the middle quintile or the top quintile than many other advanced economies. This is not our self-image as a country, and it's something we need to address. The other is just that the relative stagnation of those incomes in the middle and the low end. You know, we want, of course, prosperity to be broadly shared, and it comes down to really education and training and things like that that enable people to do well in the modern economy, which is a globalized economy that is less about manufacturing, and the manufacturing jobs are more technical than they were. So we need a workforce that can benefit from technology and globalization, and those are policies that the Fed doesn't have our hands on.
No, you don't have those policies, but if we just sit back, those trends will continue, and they'll cause even further divergence between the vast majority of Americans and a very small group of Americans. So it's incumbent upon Congress, the executive, to start taking steps. Is that fair?
I think so, and I also think U.S. businesses get this very much now. If you talk to business leaders, they see the workforce and the need for widely shared. We want prosperity to be as widely shared as possible. You hear that all the time from business leaders and certainly government leaders as well. I do think it's an important national priority.
Thank you. Just switching gears here, the Community Reinvestment Act is being massaged by both the Office of the Comptroller of the Currency and the FDIC, and there's been some comments critical of their efforts, both not just by affordable housing advocates, but by some banking institutions, that they are not doing a proper cost-benefit analysis, that their proposal unintentionally could discourage revitalization of neighborhoods that really do need it most. And can you let us know what role you might play and how you can help get it right?
Sure. So first of all, we're not going to comment on their proposal, and it's out for proposal. I think all of us, including the FDIC and the OCC, are looking forward to seeing those comments and learning more. I think we do share the goal of modernizing CRA. Technology and demographics have really changed the delivery of banking services, particularly in rural areas, for example, but everywhere. So it's time to do that. It hasn't been done in 25 years. I think we agree on the goal, which is we want it to be more effective, and it would help that if it were more transparent, more objective. So I think we share objectives with those agencies, and we work closely with them for a long time to try to get completely on the same page. We developed our own approach, which was slightly different, a bit different, and we weren't able to get together in the end. But I think we should look at it as an ongoing process where we'll continue to learn. That's going to be our approach.
Again, thank you, Mr. Chairman, and I'll stress independence one last time.